Hi everyone, I'm attorney Aiden Kramer with the Law Office of Aiden H. Kramer in Colorado, and you are watching All Up in Your Business. So if you watched the last episode, you'll know that we are talking about some tax stuff that comes up with businesses, because you guys, from all the questions you give me, it's obvious that taxes are a really big topic and something that you guys really want to know more about. So just like last time, I invited my friend Joseph Lutz and Natalie Lutz to help me answer some of your guys' questions. So Joe, why don't you introduce yourself again and then get into it?
I'm Joe Lutz, your small business CPA, where our premium small business package does make the difference. Now we're going to be talking about which is better for your business, an S corporation or a Schedule C where you file on your 1040 return, whether you're an LLC or a sole proprietor.
So one great advantage of an S corporation is the audit risk. A single member LLC, which files your return on your personal return, is about 1,000 times more likely to be audited than an S corporation.
Advantage S Corp.
A Schedule C taxpayer generally must pay self-employment tax on all income after expenses up to $118,000 for 2015. In S corporation, the owner is required to pay themselves a reasonable salary, but it does not have to be all the income, resulting in savings on self-employment tax. Advantage S Corp.
Health insurance, health savings accounts, and Medicare are fully deductible in an S corporation, whereas in a Schedule C, they are subject to self-employment tax. Advantage S Corp.
Contributing to a SEP pension plan in an S corporation results in a deduction from self-employment tax and regular tax. Contributing to the same pension plan on a Schedule C does not reduce self-employment tax. Advantage S Corp.
We recommend the S Corp shareholder reimburse for mileage, cell phone usage, and office in the home. In the office in the home reimbursement, there is no depreciation because that is really not a reimbursable expense. In a Schedule C, the expenses are basically the same. However, in a Schedule C, you are required to depreciate your residence. And when you depreciate your residence, when you sell the residence, you do have to recapture the depreciation. So in an S Corp, you do not have to recapture the depreciation, but in a Schedule C, you do. Advantage S Corp.
Active S corporation owners are required to take a reasonable salary from the business. We recommend that all income taxes are paid through the salary, therefore eliminating estimated payments. Schedule C filers or single member LLCs are required to pay estimated payments each quarter to pay in their taxes. A lot of times, if their business fluctuates, goes up, goes down, they make more or less income, they're not properly paying in their estimated payments, which could result in additional tax owed on April 15th. Advantage S Corp.
A salary of an S Corp does increase the complication using an S Corp, whereas a Schedule C does not have to take a salary and makes it simpler. Advantage Schedule C.
If the business is going to obtain a large loan, such as an SBA loan or other loan from a bank, it could be more advantageous to file a Schedule C. It gets kind of complicated, but it creates a basis issue in the S Corp. In that case, advantage Schedule C.
For one monthly fee, in an S Corp, we do payroll taxes, sales taxes, QuickBooks entry, continual planning throughout the year, and the year-end corporate income tax return and the shareholder's personal return, all free of charge.
Yep, and they are great. I use them myself, and I'm very, very happy with it. If you guys want to get in contact with them, their contact info will be in the description and right there at the bottom of the screen. And if you have any more questions, feel free to comment them below and we'll try to answer them again in a later video. So I think the general consensus then is S Corp for the most part.
We would say so.
Right? Okay.
Yes.
So to summarize, S Corps are usually better. Thank you guys so much for joining me.
Thank you.
Thank you guys so much for joining me. I'm Aiden Kramer, and I'll see you next time.